Thank you, Ali. Hello, everybody, and welcome to this earnings call of LIC Housing Finance. From the management team, we have Mr. Siddhartha Mohanty, MD and CEO, and Mr. Sudipto Seal, CFO. I would request Mr. Mohanty to share his initial thoughts on the result, post which we'll open the floor for Q&A. Over to you, sir.
Good afternoon, and welcome to the post-earnings conference call of LIC Housing Finance Limited. As you would be knowing, LIC HFL declared its Q2 FY20 results on Saturday, 19th October. The key highlights of the results are revenue from operations 4,973 crore as against 4,202 crore for the corresponding quarter of the previous year with a growth of 18%. Outstanding loan portfolio is at 2,03,037 crore against 1,77,393 crore as on September 2018, reflecting a growth of 14%. And out of this, individual loan portfolio stood at 1,89,351 crore as against 1,66,457 crore with a growth of 14%. Within the individual loan portfolio, home loan portfolio stood at 1,54,059 crore against 1,36,350 crore with a growth of 13%. Disbursements during the quarter were 12,173 crore as against 14,295 crore for the same period in the previous year. Disbursements in the home loan segment clocked a healthy growth of 16% during the quarter and stood at 10,136 crore. Disbursements in the project loan construction finance were lower at 445 crore against 2,970 crore. Net interest income for the Q2 was 1,213 crore against 1,047 crore, up by 16%. Net interest margin for the quarter were at 2.42 as against 2.41 for quarter FY19. Profit before tax clocked a growth of 15% to 856.06 crore from 745.35 crore. Profit after tax for the quarter stood at 772.20 crore as against 573.16 crore with a growth of 35%. Environment during the second quarter of financial year 2019-20 continued to be quite challenging. However, considering the situation, company performed fairly on the business front, recording an overall disbursement of 12,173 crore, out of which individual loans disbursed was 10,136 crore against 8,739 crore for the corresponding quarter in the previous year, recording a growth of 16%. Among the regions, our central, southeastern and northern regions registered good growth. On affordable housing front, under PM-AY CLSS scheme, company continued to perform exceedingly well. For the half year, the company disbursed nearly 25,000 accounts totaling 5,000 crore under this scheme, accounting for nearly 26% of retail disbursements in volume terms and 24% in value terms, and has received a subsidy of more than 400 crore for the beneficiaries. In terms of growth, this segment has shown 68% growth in volume and 77% growth in value terms on a year-on-year comparison basis. Looking at this, we are very confident of significantly improving upon our last year's performance. Considering the overall market conditions, we have done lower disbursements in the project loan construction finance, which is 445 crore against 2,970 crore. Disbursements in LAP and other non-housing has also come in lower by almost 1,000 crore. On the portfolio growth front, the total portfolio recorded a stable and consistent growth of 14%. Growth in the individual home loan segment registered 13% year-on-year. Pursuant to the introduction of Indian Accounting Standard, companies are required to report expected credit loss, ECL, on their loan assets and provision thereon. In terms of asset quality, there has been an increase in stage 3 exposure at default, which has increased by 40 basis points from June 19 from 1.98% to 2.38%. This is a matter of highest priority and concern for us, and we are taking necessary action. However, we are also receiving some part payments in several accounts and are confident of recovery since the value of the underlying security is quite higher than our loan exposure. Many of the projects are either complete or nearing completion, which gives us confidence that the recovery will improve as the sales increase. As mentioned, we are according highest priority to this area across the company. Provisions under ECL has also increased from rupees 1,559 crore to 2,195 crore, out of which Stage 3 ECL provisions has increased from 1,170 crore to 2,083 crore. On the cost of fund side, margins have remained largely stable at 2.42% as against 2.41% over the previous year and against 2.35% over June 2019. We have witnessed a reduction in incremental cost of funds by 20 basis points from 8.24% Q1 FY20 to 8.04 for Q2 FY20. The funding environment and liquidity conditions remain quite favorable. During the quarter under review, we have raised 10,000 crore through NCDs, 3,600 crore through CPs and 3,000 crore through public deposits in addition to bank loans. With this brief introduction, I would like to invite you for your queries. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Srinath from Quantum Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. There were just a couple of questions that I had. First off, in terms of the pure floating rate loans, I noticed it fell between the first and second quarter from 93% to 82%. I was just wondering what drove that. Secondly, I would like in terms of, the 13,685 crore split, the project loan that we have reported. I just wanted to know what is the split between the corporate and the builder book over there and the split in disbursements over there, if that would be available. Thank you.
Yeah. Aditya, see, actually, for the second question, mostly it is the builder loans only, builder and project finance.
Okay.
And disbursement figures we have already shared.
Yeah.
On the opening comments, that it was for the quarter 2,907 as against 2,970 for the previous quarter.
Yeah.
145 crores.
Yeah. And for the first question, sir?
Actually, the first is, this is basically some new product which we had launched.
Okay.
With an initial period which was fixed. That is the only difference.
Okay. And would we be looking at a capital raise as well within this year?
That will be taken care of whenever we require. Our board will take care.
Right, sir. Thank you. Thank you very much.
Yes.
Yeah. Thank you. The next question is from the line of Akash Dattani from HDFC Securities. Please go ahead.
Hello.
Yes.
Yeah, hi, good afternoon, and thank you for taking my questions. So my first question, could you give us the split of GNPAs between individual home loans, LAP and other products, and the construction / developer finance book?
Yes. See, individual loan NPA is 1.20%.
Okay. And so is this for home loans only?
This is individual retail home loan.
Okay, that's great.
Yes. And our total average under individual, it comes to 1.66.
Okay.
including individual LAP and commercial, all those things, if you take together, so it is 1.66. But including project finance construction loan, it is coming to 2.38.
Okay, that's great. So, and secondly, do you see also over the past couple of quarters there has been a significant build-up in stress? While not too alarming, do you see this trend continuing?
You see, actually, now I believe since the government has taken so many initiatives on both sides, on the side of supply side of credit as well as boosting consumption demand in the retail side. So I believe there will be some improvement, some positive indication will be there in coming quarters. Even during the quarter also, out of the NPA, because our NPA has gone up, you have seen.
Yeah.
Despite that, we have recovered from during the quarter some 40 crore from those accounts. 28 crore for part principal payment and 12 crore for interest payment. Even if we have received, but those accounts still continue to be NPA as per norms.
Okay. So
that indicates builders, our borrowers, they demonstrate their intention to pay.
So, and this
their intention is to pay.
Okay, and this is from the developer finance book you're saying, right?
And it is from all.
Overall.
Retail and a developer is also there. If you take a developer and a retail both, amount will go up. Principal will be nearly 38 crore and interest will be something 2750 or 28 crore. Total. Retail and developer total together, 38 and 28.
And,
but these are part payment. These are from NPA accounts only. We have received this much amount.
So, and with banks now, offering a lot of external benchmark-linked loans, how do you see, how will LIC Housing Finance compete? What is the outlook or strategy there?
You see, actually, external linking your rate to external benchmark, actually that is for banks, not yet for HFCs. But in any case, we have to operate in the ecosystem. Unless my rate is competitive, I cannot compete with banks. Okay, whether linking to external benchmark or not, our rate will be competitive and looking to cost of fund being stable or going down, you will find that we will be there. We will have a competitive rate and today also we have the most competitive rate in the market.
Okay, and so on cost of funds, how could you shed some light on the repricing of your borrowings in the coming year? How would you see that happening?
See, in the next 6 months, this is from the next 6 months, that is October to March, about 17,500 crores of bonds are going to get redeemed, getting mature, and they are currently carrying a coupon of around 8.3. And looking at the blend, we expect that we should be able to fund them at least by 35 to 40 basis points lower.
Okay. And my last question is... Yeah.
Okay, please carry on.
Yeah, sorry. My last question was, so in the previous con call, there was a mention of this task force that was constituted to address asset quality matters in the developer book. So, any progress or any insights that you all would like to share on that?
Yes. We have formed a dedicated team to follow up with the builder loans. Dedicated team is there. They are monitoring and they are advised to take all action, including legal action. And they are negotiating with the builders. Even last moment we could not get some big loan amount, that which I expect in the coming days. That's why it has gone up. So dedicated team is closely monitoring each account and our objective is to ensure that there is no further slippage at least. Whatever has been done, that has to be recovered. Further slippage, how to arrest that. So they are looking into that.
Okay. That's great. That's it from my end. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dhavalkara from DSP Mutual Fund. Please go ahead.
Hi sir. A couple of questions. First on asset quality. Could you just give the split between gross NPA for salaried and self-employed segment, and also gross NPAs in the top 7 cities and rest of India? Just wanted to understand where is the problem.
Actually, we don't maintain that salaried or like that, but salaried class as such, it is very negligible. Salaried class, we don't have any bad experience. Overall, you see, retail and construction finance. So there is gap. Obviously, our builder percentage is higher than individual retail. So looking to both sides, if average it comes to 2.38. And but salaried class, there is no such, we don't maintain such type of thing, but the experience is good.
Okay, and sir, between geographies, top 7 versus rest of India, any color there?
It is spread across.
Okay. Okay. And just, sir, one data point on asset quality. Could you give the individual home loan GNPA for 2Q FY19, the same number, 1.2 number that you gave? What was the number same period last year?
Last September.
Yeah.
Last September individual. This one. Last September individual housing loan was 0.76.
Okay. And overall individual was 0.81.
Overall was 0.81 and now it is 1.05 for Q2. Individual housing.
Sir, you said 1.2 or 1.05, sir?
1.05 is only individual. If you tell total, that will come. Because in individual housing loan, non-housing individual loan, non-housing commercial, we segregated to 3 categories under individual. Then that is the total retail. Retail constitutes individual housing loan, non-individual loan and non-individual commercial.
And individual housing is 1.05.
Individual housing is 1.05.
Okay, understood.
Yes.
And and just one last thing on lab disbursement. I joined the call late, but what was the number for this quarter? Lab disbursement?
1592.
Lab 1,592 crore.
Okay, and
1,592. Yes.
Yeah, and Sudeep, so just one question on number restated for the base year. What is the reason? If you have mentioned that ever.
This is which line item? Can I please?
So the loan figures for the base.
Loan figure, there is no restatement.
No restatement.
Loan figure, outstanding loan.
Yeah. So
outstanding loan, the only restatement could be the impact of Ind AS. As you will be knowing, the outstanding loan as per Ind AS and the outstanding loan as per IGAP, there is a slight difference.
Okay.
But the difference is not even 1%.
Understood. Okay, perfect. Thank you so much.
Now it is at par. I mean, both are comparables.
Yes.
Okay, perfect. Thanks.
Thank you.
Thank you. The next question is from the line of Hardik Shah from Max Life Insurance. Please go ahead.
There's a couple of questions.
Yeah.
The builder book NPA last quarter, I believe, was around 11%. What would be that number now?
That has gone, I think, another 3% has gone up.
Around 14%?
Yes.
In terms of recovery measures, have you enforced SARFAESI in any properties? And
all action. Some are, we are deciding and some already SARFAESI action is already in place.
What would be quantum of that?
Exact quantum, I think 50-60% of the NPA amount already under SARFAESI.
Okay. And sir, what is the capital adequacy for your second quarter?
Yeah, capital adequacy approximately should be in the range of 12.3 to 12.5.
Okay. So it is very close.
Tier 1.
Tier 1. Okay. And overall?
Overall will be more than 14.
Okay. And sir, finally, in terms of ALM, how would your less than 1 year profile look like?
Sorry, can you please repeat?
ALM profile for less than 1 year?
Less than 1 year within NHB limit of 15%.
And what would be the mismatch percentage?
Sorry?
Mismatch.
What would be the mismatch?
No, mismatch will be maximum permissible is 15%. Ours will be around 13 or thereabouts.
Okay. And unutilized lines for you guys?
Unutilized lines will be more than 10 to 15,000 crores.
Okay. Yeah, thank you so much.
Thank you.
Thank you. The next question is from the line of Pranay Rajani from B&K Securities. Please go ahead.
Yeah, hi sir. Just a few data keeping points. If you could just provide the interest income breakup for individual and for project. I mean, the total split between individual and project.
Yeah, the interest income.
Yeah.
Okay, I'll just give you the data.
Apart from this, what would be our incremental yields? I mean, product-wise, I mean, on overall basis, home loans, non-gold.
Interest income on individual will be, that is there in the presentation page, slide number 14, but I'll just repeat for your convenience.
Yeah.
Just 1 minute. Yeah. 4,530. That is for the individual. That is for the quarter.
Yeah.
Project will be around 380.
All right, sir. And also on the incremental yield basis, if you could share the data for product-wise, segment-wise.
Incremental yield-wise, I'm just giving you the non-annualized numbers. You can annualize them. That the impact will be around 40 basis points.
Okay.
Separately, it is, say, for the individual retail home loans, only the pure home loans, incremental, this is around 8.84. So you can annualize, that will add about 40 basis points.
Okay.
And for the non-home loan retail, that will be 10.5%. Builder loans will be 12.7%.
All right, sir. And one last question.
Yeah.
I'm sorry, sir?
Blended will be 9.3.
Blended will be 9.3. And also, if you could just share the net NPA number for the quarter.
Net NPA, actually, if you look at it, as of now, the net NPA figures for the NHB purpose only we are calculating. We are not, for the provisioning purpose, it is always the figure for the ECL. The net NPL, as for the ECL stage 3 is concerned, it is 2083 crores.
2083 crores.
Yeah.
All right. That would be all, sir. Thank you.
Yes.
Thank you. The next question is from the line of Udit Kariwala from Ambit Capital. Please go ahead.
Yeah, good afternoon, sir. I had two questions.
Yeah.
First is that we've seen that the corporate tax rate has gone down, and as per my understanding, or as per the regulations, HFCs earning certain profits on the individual book can be parked in the as reserves, and you don't need to pay tax on that. So, what is the reason for a drastic, decrease in the tax in the current quarter? And has that been done in consultation with the IT department, or it's an internal call which the management has taken?
No, see, it is actually as per the change. I'll give you the difference. The tax rate which was applied in the first quarter, you are probably referring to that. The first quarter tax rates have been applied at almost the full rates because, it is to be prepared on the basis of the amount of anticipated profit and the rate of taxation which comes out of that. So that was the reason for preparing the tax provision as on the Q1. Now in the Q2, what has happened is that there has obviously been a change in the taxation structure in terms of lower tax rate on the corporates. We will continue to get the benefit of a particular section 3618 because that apparently is a rebate. That is what we are interpreting it. So the overall tax rate has come down and will stabilize by and large at around 21-22% plus whatever surcharge is applicable.
So correct me if I'm wrong. So what we are trying to say is that
whatever impact had to be taken for the extra taxation which was provided for the first quarter has already been absorbed in the second quarter. Which
is fine, but what I'm trying to understand is that for without the benefit of the section 36 which you mentioned, the rate has to be around 33%, but taking the benefit, it comes to around 28% broadly, right? Now, after the corporate tax rate is now reducing to 25%, the benefit will still continue or on that section 31?
Yes, section 36.
Earlier we were not taking
no. Section 36, not 31.
Yeah, sorry. So that benefit continues.
That is a rebate.
Okay. And hence you're saying for this quarter the tax rate is currently around 10%, right? Which is because of the Q1.
That is because the 10% rate is not the applicable tax rate.
No, I'm saying
because there was some extra.
Yeah, 1Q you've factored in. Yes. Okay. And sir, you already spelled out the delinquency numbers, but I got a little confused between the three numbers which were given. So if you could just give out the NPA numbers.
I'll just first explain, sir will give you the numbers. There are three different categories of loans. One is the builder loans, as you are aware. The second is pure home loans. And the third one is within the retail segment, there is also a segment which is the non-home loan segment.
Okay.
So that is the reason three numbers were given.
Correct.
Now sir will tell you the number.
Actually, as I told earlier, home loan total, it is coming to 1.05% NPA.
Okay.
And non-housing individual, it is 2.36.
Non-housing individual.
Individual. So overall retail coming to 1.52, but the project construction, that comes to 14.8. So overall comes to 2.38. That is the breakup of our NPA segment wise.
Okay. So the housing loan you are saying is around
1.105. Yes.
Okay, which is the core housing book.
Core housing, pure housing, yeah.
Yeah.
Okay.
And within that also, if you see our experience in particularly affordable Pradhan Mantri Awas Yojana, NPA is almost nil, 0.07%. So that is the area we are focusing now.
Okay. And just one follow-up on this. So if I just break the numbers, then the delinquency in the LAP book has gone up in this quarter, right?
No, it has not gone up significantly. It was around 2.2-ish in Q2. From there, it has gone up to 2.36.
Okay, fair. Thank you so much.
Okay, thank you.
Thank you. The next question is from the line of Kunal Shah from Edelweiss. Please go ahead.
Yeah, again, coming up on tax, so was there any DTA markdown during the quarter, or because we had DTA in our books and most of the financial companies have marked it down, so has there been any adjustment on that count?
See, there was also a provision of DTL in our book, deferred tax liability.
So on a net basis, there was still deferred tax.
Yes, that impact has been absorbed already.
No, so that should have been around about 150 odd crores. So how much was the impact in this quarter?
No, what I understand is that the full impact has been already absorbed.
Taken.
No, if you can quantify the amount.
The amount exactly I'm not having right now, but the full impact has been already absorbed.
Okay. So entire...
Because we have to also see from the DTL, deferred tax liability, which was there. So the further creation of deferred tax liability under ECL is not required. So you have to also compare that aspect.
Okay. But whatever was down, it is largely taken care of in this quarter.
Yes.
Okay. And secondly, in terms of stage 2, so despite the stage 3 moving up, we have seen stage 2 being there at 4.74%. So going forward, do we see similar kind of run rate even in the stage 3? Because finally it flows largely from stage 2 and there is no change as such. So maybe 30-40 bips kind of an increase. Should that be the expectation going forward as well? Or how different is this stage 2 from what it was there in the Q1?
Actually, I see some improvement will be there. There won't be much increase from stage 2 to stage 3. But let us see, because some cases where we were to get at the last moment, we could not get. Some big accounts that could have been out of NPA, but somehow that could not materialize. But as I told earlier, we have received a good amount. Principal 37.5 crore and interest 27.5 crore from this NPA account. So there, I don't think there will be much increase from stage 2 to stage 3.
Some payment is still coming. Even in the NPA accounts, we have just captured the NPA account details about whatever accounts were NPA as on 30th of June. Within that also, during the last 90 days, we have received about 64 crores total, including 37 crores of principal plus interest around 27 crores. That is only for the quarter. Similarly, whatever has been categorized in stage 2 also, there are some payments which are coming. It may not be full payment, but part payment is coming. So that gives some confidence that at least the payment cycle has not completely got stopped. In fact, in the retail segment, we can share that about 2,000 accounts which were NPAs on out of total number of retail accounts which were NPAs on 30th of June, there were 2,000 accounts which have made payments.
Out of
the NPAs which were there in the as of 30th of June. So roughly around 20-25% of the accounts have started making payments also.
Okay. Okay. And overall, when we look at the deterioration which is there, maybe almost like 15% of the developer pool, 1.5% of the individual side, definitely it seems to be much.
1.05.
No, overall individual.
No, overall, yes.
Home loan and the non-home loan, that is 1.52.
Yeah.
And in fact, like when I look at even like the pure home loan, that is also upwards of 1%. So what is the reason? Maybe I think, is it, so maybe when we look at most of the other players, in fact, they are at a much lower level. So was it like the conservative approach, upfronting of most of the stress in the book and we are more or less done with, wherein say the other players will catch up, or maybe this was largely because of the underwriting or specific geographies wherein we were present, which is leading to this kind of maybe higher GNPLs compared to the peers?
No, if you see current business pattern, actually this builder book has gone down. There is a significant degrowth in builder loan in the current year. These are loans which were given earlier, and looking to overall scenario, sales has gone slow. So some of the projects, they are at the final stage of construction, but they are not able to complete and hand over the projects. Some of the projects are 80-90% complete. So overall, if you see, these are the problems. But looking to present initiatives by the system, government, banks and everything, now credit flow is there. So I am hopeful at least that will help in easing out the present position. And festive season sale will also increase. So let us see in the coming third quarter some improvement will be there.
No, so main question is on the retail side, which is much
retail is there. Retail particularly within retail affordable segment, we are focusing in retail not a high end or premium. We are focusing on affordable. So that is doing very well.
No, but something like under construction, wherein we are seeing more GNPLs flowing for us compared to the peers, is it largely because of that, even on the left side, or maybe the non-housing, there has been increase? So what is leading to overall rise and being much higher than the industry average?
See, we cannot comment upon that as far as the other competitors, etc., what you just mentioned some time back. But if you see the whole retail home loans, if you look at the quality and the, I would say, the nature of the loans with a very low LTV, this is mostly in the nature of delays as far as the home loans are concerned. Under construction does not impact LAP.
Yeah, but on retail home loan it would.
It does to some extent, but it is not such a problem, because at the end of the day, for a retail home loan customer, what is more important is his individual CIBIL score, which will get impacted if he stops payment for whatever reason.
No, but what would be the proportion for us to under construction on the retail side home loan?
The exact, it is not immediately available, but generally over the last 3-4 years, what we have seen, the share of under construction has been coming down because of some kind of uncertainty related to completion of projects, and steadily the customer's preference towards occupying ready-made or ready to move in, that has increased steadily, and it has not happened a couple of quarters. It has been happening for the last 3 to 4 years. So the share of customers opting for a ready to move in has increased significantly in the last 3 to 4 years. And if you see in the last couple of years, the rate of new launches have also been coming down.
Okay. And lastly, in terms of the rise in the corporate or maybe the developer book, if you can just give some color on it in terms of the number of accounts, whether this has flown purely from the stage 2 to stage 3, and how has been the behavior of this portfolio? Maybe was it like over last 3 months wherein we saw this deterioration, or it was maybe the stress over last 6-9 months?
See, actually it was a movement from stage 2 to stage 3. The stage 2 means that already probably they were in the 30 to 90 days basket already. So that 30 to 90 days has now moved on to a stage 3, which is more than 90 days. And in the interim period, maybe a couple of months have added. So the last 3 to 4 months, number of accounts would have been around 4 to 5, which would have contributed predominantly.
Okay. Okay. And any specific region, or it is in general everywhere?
No, it is across. It is across.
Okay. Yeah. Yeah. Thank you. Yeah.
Thank you. Participants are requested to limit their questions to one per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Hardik Shah from Max Life Insurance. Please go ahead.
So what portion of the builder book would be under moratorium today?
I think 4,
30 to 40.
3, 30 to 40 accounts.
30 to 40.
In terms of percentage of the book?
Percentage, 35, 36%, within 40%.
And this moratorium would be for how much period?
Generally between 12 to 18 months.
12 to...
So for that 12, 18 months?
Yes.
12 to 18 months, generally.
Okay, thank you.
Thank you. The next question is from the line of Mohit Mangal from CRISIL. Please go ahead.
Yeah, so thanks for the opportunity. So I was just looking at your presentation and I found that the bank in the overall borrowing mix has increased from 13.65 to 15.46, and there is also a benefit in terms of weighted average cost on it for about 20-25 basis point. So do we see this trend going forward wherein we, use bank as a major, major funding source for the company?
Yeah, it will be one of the important sources. And certainly what we will be focusing upon is to see wherever we can get the best pricing and within the ALM requirement. So bank funding incrementally has been increased, but the rate of the cost of funds there also will be coming down. As you would be knowing that most of the banks have been reducing their NCLRs. So that presents a slight opportunity in reduction of cost also.
Okay, right. Thanks so much.
Thank you. The next question is from the line of Sagar Shah from Alpha Line Wealth. Please go ahead.
Good morning, sir. My questions have been answered. There's just one actually.
Sagar, you're not audible.
Can you please speak?
Yeah, hello. Can you hear me now?
Yeah.
Yeah, my first question is, can you give me a geographic diversification of your loans, please, sir?
Yeah, you can refer to one of the presentations where we have mentioned in one of the slides that the definition we have given is metro versus non-metro. If you look at the metro versus non-metro, that is on page slide number 9.
Yeah. The top 7 cities.
Top 7, that is basically metro non-metro. Top 7 cities is Mumbai and MR region, NCR, Delhi, Bangalore, Chennai, Hyderabad, Pune and Kolkata.
7 cities.
That contributes 44%.
44%.
Current year's disbursements, and the balance 56% from all other cities.
From the non-others. Okay.
No.
My second question is the follow-up for the previous one. The stage 2 is you're referring to 4.74% of your total loans actually. This is the stage 2 loans, exposure at default. So how confident are you on that percentage of your portfolio to not to slip to the stage 3?
As we mentioned, the payments are coming, but the fact is that as far as the builder loan is concerned, which comprises a major portion of the incremental NPLs in the last maybe 1 year or so, where the sales have been coming down, sales are reported slower. So we expect that once the sales position improve, there will be an improvement not only in the stage 2 but also in the stage 3. Whatever sales are happening, the money comes to us. But the sales which were happening at a particular rate per month, that has come down significantly in the last maybe 2 to 3 quarters.
So how much percentage of the builder loans is from stage 2?
Stage 2, stage 2 about maybe 400 crores will be stage 2.
400 crores?
Yeah. 400 to 500.
Okay. And from the developer loans of the total developer book, how much percentage is actually is kind of a project loans? How much percentage of that projects is 50% or below constructed actually?
No, can you please repeat
total book?
50% completion.
Can you please repeat your query?
Of the total project loans, what percentage is 50% of less construction is being done?
More than 50-60%.
It will be more than 50-60% where the construction is ahead of 60%.
Yes.
Whatever disbursement we would have made in the last maybe 1 year or so, obviously for those projects our exposure will also be as per stage of
construction. Yeah, construction linked.
Our disbursement will be stage of construction linked, and there obviously whatever we have disbursed recently, the stage of construction will be initial phases.
Okay, so currently you're focusing more, as sir said, you're focusing more on the affordable housing part, PMAY Yojana.
Yes.
So going ahead, are we going to see disbursements more in that field itself? Because for the last 1 year, LIC Housing Finance, the gross NPLs have been moving up actually every quarter by quarter in building loans only. That's why. So it doesn't make any sense for the company to move ahead in that segment, especially in this kind of environment.
No, you're talking
about affordable. Obviously, we'll focus on affordable and PMOI because there you see asset quality is far better, superior, or experience is good. But that does not mean that if good projects come, particularly projects which cater to this segment, projects which cater to affordable housing, projects which are under PMAY, those also will be definitely funding those projects, good projects.
That will be not
most important is sell.
Okay. But that won't be in the those PMAY projects, I guess they won't be in the metro cities, right?
No, those are in metro cities only. Many places already. Yes. We are in fact metro cities, PMYs are there, outskirts of metro, of course. Those are there. And they get also some incentive. Developer also get some incentive from the government, some tax rebates, those things are there. If that is registered under PMOI.
So if that is the case, can we expect at least the ECL stage 3 from 2.38 to at least below 2 in FY20 or maybe in FY21?
Yeah, definitely. That position will improve.
Okay. Good luck for the future.
Yeah.
Thank you.
Thank you. The next question is from the line of Rakhi Prasad from Alder Capital. Please go ahead.
Thank you for taking my question. I wanted to get a sense more about the builder book in terms of the split between metro and non-metro cities, and also how the NPA for the builder book is split between metro and non-metro cities.
Actually, entire builder book is spread across 7 cities, 7 top cities, and our experience is across all the cities. We cannot say a particular region has more NPA or a particular region has less NPA. Our experience is mixed across.
So any and Mumbai and Delhi, would that proportion be larger amongst the top 7 cities?
Everywhere it is there.
It's equally spread across.
Yeah.
Okay. So then all these NPAs are sitting in these top 7 cities then?
Yeah.
Equally spread?
Equally, I cannot say. There will be variation, but it is spread.
Okay, fine. Okay, thank you.
Thank you. The next question is from the line of Gaurav Kochar from Mirae Asset. Please go ahead. Gaurav, your line is unmuted. Please go ahead with your questions.
Hello, can you hear me?
Yes, please.
Yeah. Thank you for the opportunity, sir. Just one question on your stage 2 assets which you've disclosed in June, which was around 4.74% of the book and still stands at 4.74% of the book. And you said, sir, correct me if I'm wrong, about 500 crore project loans form part of this. So if I deduct that amount, I mean the remaining would come from individual home and LAP, right, if I'm not wrong?
Yes.
So which means that roughly around 4.5% sort of stage 2 assets come from your individual home loans and LAP.
Yes.
Around 4 point something, yeah.
That's a very high number. If you consider the NPA, NPA stage 3 is only 1.5%. Your stage 2 asset is 4.5% of the total.
No, that is okay. There is nothing wrong in that because obviously, as we mentioned, majority of the accounts in the retail, especially in the home loans, are in the nature of delays, and that has always been the case. Right now, we are disclosing stage 1, stage 2, stage 3 separately. But this account, this segment, which was more than 30 days and less than 90 days, that has always been in this.
Okay. Because if I look at the previous, right, in June 2018, that number was 3.83.
Yes.
It was 4.16 in the last September.
Yeah.
Total.
So that number
and that included the project loans also.
Right. So you're saying the individual home loan experience has been similar?
Yeah.
So why are you confident that this number would not...
We didn't say similar, but it has been consistent.
Okay. So you're reasonably confident that this won't slip into stage 3 assets in the near term?
Yeah. For example, in December 2018, the stage 2 assets overall was 4.93.
Right.
So today, if you see, as compared to December, the stage 2 has actually come down to 4.73. So it has been in that range.
Okay. And any reason, sir, your provision, ECL provision on stage 2 assets has gone down from 129 odd crore in last quarter to 82 crore in this quarter?
ECL provisioning is a formula-driven kind of a number which comes out depending upon the expected credit loss in a specific segment.
Okay.
So when a particular asset has been considered, say for example in the stage 3, if it has moved from that particular lumpy asset has moved from stage 2 to stage 3, then obviously it will not be required in stage 2.
Okay. Okay. That's it from my side.
Yeah, thank you.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Hi, am I audible? Yeah. Just one question, and this pertains to really the disbursement figure. I guess your retail disbursement or retail, individual home loan disbursement was in single digits. I think my math was up around 6-7%. So I'm just curious as to what are your thoughts over here? When does it really pick up?
No. Individual home loan disbursement is not in single digit, Nischint. Individual home loans disbursement for the quarter, if you are asking, 10,136 crores as against 8,739 crores, and it is 15.99 or 16%.
Growth is there.
Maybe you are looking at including the LAP.
Okay.
Including the LAP, obviously, as we mentioned in our opening comments, what our MD mentioned in the opening comments, the LAP disbursements are almost 1,000 crores lower as compared to Q2 of last year. So if you add these two, then yes, what you are saying is right. But I'm talking only home loans. Home loans, there is a 16% growth.
Okay. Got it. Thanks. Thank you very much.
Thank you. The next question is from the line of Piran Engineer from Motilal Oswal. Please go ahead. Piran, your line is unmuted. Please go ahead with your questions. As there is no response, we move to the next question from the line of Devesh Kayal from Carnelian Capital. Please go ahead.
Hello?
Yes.
Yeah, what's the cumulative provision we have provided made till now on the builder book?
So total is 2,083 crore.
Okay. Yeah, that's it from my side.
Yeah.
Thank you. The next question is from the line of Umang Shah from HSBC Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted to know, if you look at our bank borrowing weighted average cost, we have seen quite a bit reduction in the weighted average cost of fund, but the similar fall doesn't reflect in our NCD borrowings. Has it to do something with our older borrowings?
Obviously you would be aware that bank borrowing is a floating borrowing.
It was earlier.
So, as and when the MCLRs have reduced or whenever we have been able to negotiate, it has come down. But NCDs are fixed rate borrowings. So, NCD overall borrowing cost will come down as and when new infusion of funds come in at a lower rate, and also the existing book which matures, which the number which we have shared a few minutes back, when that runs off and that gets replaced, you will see a benefit there also.
So basically over next 2 to 3 quarters, we should see some meaningful reduction in the NCD borrowing cost.
Yes. Definitely. It is happening even as we speak. It is happening even now. For the just to give you an example of the movement which has happened. Say last year around this time, that is October 2018. Say a 10-year paper would have been placed at upside of 9%. Today, if we do it, it will be around 8%. Similarly, for a shorter end paper, maybe 2 years paper would have been placed at in the ballpark of 9.2 to 9.3. It was an inverted yield curve. Today it will be almost 200 basis points cheaper.
Okay, understood. That's helpful. Second question was regarding one of the result notes mentions about inspection report for 2017-18 received from NHB. Any specific observations or it's just business as usual?
No, it is a normal
inspection.
General inspection, normal. Every year it happens.
Every year they do inspection and they have their observation.
Okay. Just last data point which I wanted to confirm. So our LAP disbursements were at about 1590 odd crores this quarter versus 2500 odd crores in the previous year.
Correct.
Okay, and our steady state tax rate should be now closer to about 25%, so 22 plus the surcharge.
Yeah, surcharge.
Okay, all right. Thank you and all the best.
Thank you. The next question is from the line of Abhijit Tibrewal from ICICI Securities. Please go ahead.
Yes, sir, thanks for taking my question.
Thank you.
Yeah, thanks. Just had a couple of questions. So one thing is I'm seeing our intangible assets have gone up materially. Is it because of that Ind AS 116?
Yes.
Right to use asset?
Yes.
Yeah.
Okay, all right. So, sometime back you talk about this pure floating rate loans coming down to 82% because of a new product that we have. I'm guessing it's a semi-fixed kind of a product, right?
Yes, correct.
So for how many years is it fixed? And
no, it's a short period, 6 months.
6 months.
Okay, all right. And so, what I'm noticing is, our processing fees, which includes the fee and commission income, they've been coming down. So, what I'm seeing on your website as well, we've been waiving of the processing fees, right?
No, not necessarily. See, actually, the processing fee waiver is only maybe for specific sales promotion activities like a festival offer or some exhibition, etc. Fee collection has increased, but the accounting of that fees post the introduction of Ind AS has changed.
Right.
Now only the unamortized portion of the fees will be reflected as fees and commission. Everything else will be categorized along with the assets in a effective interest rate methodology.
Okay. And so, sorry to bother you again on the taxation bit. Just wanted to understand, if I look at H1, our blended tax rate comes to about 18.5%. And when I look at your balance sheet, there are no...
On what?
If I take your PBT and the taxes...
PBT you have to add back the provisions, no?
Right. Okay, all right. So, even if I were to add that back, just another thing that I had is we had no DTLs as on 31st March, right, in the balance sheet? DTLs. There were no DTLs as on 31st March in the balance sheet. DTL. Right. So, so whatever DTAs that we had on the balance sheet, they were supposed to be written down. After the new taxation comes in. So how is it that we got a benefit? What I'm trying to understand here is the impact was...
different issues. There are two different issues. One thing is that the benefit, the benefit actually is the reduced tax rate. You should not look at it as a benefit. It is only because of the reduced tax rate and also because we had actually provided much higher tax rate in the first quarter. So that is what is getting set off. And whatever impact of DTA had to be taken has been taken. So it is net of that. It is not that the DTA impact has not been passed or something like that.
Okay. So you mean the entire DTA impact has been done away with in Q2. There will be no further impact in the rest of the financial year.
Yes.
All right, sir. Thank you so much and all the best.
Yeah.
Thank you. We will take the last two questions. The next question will be from the line of Deepak Fodar from Sapphire Capital. Please go ahead.
Yeah, hello. Thank you very much, sir, for the opportunity. Now, sir, in your remarks, you mentioned that your NCD borrowing cost is going down, even your cost of fund you expect to come down. So do you expect your NIMs to improve? If yes, at around what levels? And given your NP levels are elevated, and so any sort of credit cost outlook you want to share?
Yeah, as far as the margin visibility is concerned, we had in the previous call also we had said that margins will be stable with a slight positive bias. We would by and large like to maintain the same outlook. Of course, assuming that the overall interest rate scenario in the economy remains wherever it is today. If there is any major change, then obviously to that extent we'll stand corrected. As far as the credit cost is concerned, there is some stability. First 2 quarters we have seen more or less in the same trajectory.
So I think this quarter it was about 0.6%, or 0.55% around.
Yeah, and in Q1 also it was by and large similar.
So this is what we might be going forward, we might be kind of expecting. Understood. And my second question is related to your AUM. Now you mentioned that you do expect some business environment to kind of ease out. So in spite of challenging environment, we are seeing a 15% kind of a growth on a YY basis. So do you expect that to kind of accelerate as you go into second half, as you expect the environment to?
Yes. We are very much hopeful.
So around
there will be growth. Our effort will be to continue the growth rate which you are seeing today. Our effort will be to continue that growth rate for the year.
Okay, fantastic. Sure. That's it from my side. Thank you very much.
Thank you.
Thank you. We will take the last question from the line of Jignesh Yal from MK Global. Please go ahead.
Hello.
Yeah.
Jignesh, you're not audible.
Yeah, sorry. Is it better now?
Yeah.
Just, most of the things has already been answered, but just reconfirming it on this individual interest income, you say it is 4530 crores. Is it correct for the quarter?
Yeah.
And what will be same amount for the last year, same quarter, Q2 FY19?
Just hold on.
Yeah.
For the Q2 of last year is 3917.
3917, right? Yes. Okay. And secondly, there were a lot of confusions around with your individual gross NPA numbers and all, but just total summing up, the right now number would be 1.52, the gross NPA individual combined altogether. Is it correct?
Combined altogether.
Right?
Yeah.
Which was 1.25 last quarter?
Yes, 1.26 I think.
Yeah, and 0.81 in Q2 FY19. Am I seeing that number correct?
Yeah.
And your by that calculation, your corporate or your developer book NPA goes to 14.28.
Correct.
Is that correct? Against 11.8 last quarter.
Yeah.
Is my calculations correct here?
Yes.
Okay, and just the spread for this quarter would have improved around 10 bips, so it should be around 2.08 or 2.09. Is my calculation roughly correct?
Yeah, sequentially there's been an improvement.
Approximately 10 bips sort of, and this will continue as you already mentioned, close to 15,000 crores getting paid off.
We'll maintain.
With 17,500 crores bonds getting matured at a coupon of 8.3, this should improve further.
Some improvement is there.
Yeah, all right, perfect. Sounds okay. Thanks a lot, sir.
Thank you.
Thank you. That was the last question. I now hand the conference over to the management for their closing comments.
I thank all the participants, and I am very much hopeful in the coming quarter, company will definitely improve in all parameters, and whatever challenges are there, I can assure we are meeting the challenges very, very effectively, and there will be improvement on certain fronts, which is now visible. So with that, I assure all my investors to have confidence in the company. Thank you.
Happy Diwali
to all.
Thank you.